Hey guys, what's up? Alec back with the daily stock market, and today was a pretty rough day in the market. I'm sure a lot of you guys had a pretty rough day also. I'm down about 2%, but that's largely because of my Apple position, which we'll get into in a second. But if you go to the 3-month chart, we're still up a good amount, and even on the year, still up 66%. As you can see, what happens is we have these dips all the time. It's very common, but what happens after the dip, if you buy heavy, then you rocket ship up. Just like every time in the past, what happens is when red days come, a lot of new investors get fearful and start selling positions. And selling leads to more selling, but if you're confident in your stock positions and your stock picks, you should not be selling. If you see red, you should be buying, 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 because you know that stock is going to be higher and you can sell it at a higher price. For example, Apple was a pretty big hit for me today, down about 4%. We're around $200 on Apple alone. I have about $5,000 in Apple, but it's bringing Apple to a good place that you might want to consider a buy position. Now, we have seen Apple when they hit lows, they hit higher lows. Like here, you'll see it's like a ladder almost. In between these two lines, it's going up kind of like a stair set. So it can definitely form that stair set again, or it could go as low as $121 a share. Now, what you'll see is this current support is right at about 127. So it is above the current support, so it definitely could go higher again. Now, this video is not going to be about Apple. What it's going to be about is options. I'm going to give you guys, we're going to talk about 5 or so different option calls. So if option videos are your favorite ones, make sure you smash a thumbs up on the video before it even starts and comment below so I keep making these option videos for you guys. Now, this week is not the best week to run options because we currently are seeing a lot of red in the market. Right now, it's looking like it's bouncing back. And I think there is a really good chance of the stock market bouncing back throughout the next week. We'll talk about some call options, depending if you believe in the stock market's going to be going down in the next few weeks, or if you think the stock market's going to be rallying and at least going up a little bit in the next few weeks. Now, I want to show you guys a little bit of a surprise that I have been working on here. It's actually a training course for options. So I'm working on the videos right now. There's going to be at least 20 videos before I get this course live. So if you guys are interested in taking the next step and learning the following, you can read this a little bit too. This is going to be the options trading course that you guys are looking for. A lot of people often ask me all the time, what's the option trading? I need an option trading strategy. So here I'm going to make a laid out course for you guys, and it's going to be around 20 videos, and I'll add to the course consistently. And the good thing is once you buy it, you have lifetime access to that video course. And as you can see, the stock market is starting to recover a little bit more. I'm only down 1.8% now. And that's why if you're watching this video, you really have to see how the stock market closes, the futures, and then you also have to watch how the stock market opens. So if you are watching this video, it's important to see how the stock market opens tomorrow. So if the stock market opens green tomorrow, or we show a little bit of green in the stock market in the pre-market, then I think that entire day can be a green day, and that's a sign that you might want to take a call option. However, if the stock market opens red and we start to see some red in the market, in the pre-market and the early opening of the market, then you might want to take a put option and ride the momentum down. So with Apple moving down about 5%, which is a big movement for Apple, you might want to consider a call option. And remember, you might want to consider for it to get down to $125 a share before you consider a call option. We pull up May 21st here, you'll see that all of the contracts are down around 50%. So that's a great time to start buying contracts, is when they're down. You get a better deal. So I would be looking at the $130 call or the $131 call. And it's only about $150 to $200 for these options. So we'll talk about some options that are rather inexpensive today also. We won't go too expensive. So I'll try to talk about options under $300 to $200 range. Now with this $130 call, all you're looking for is a 3% gain on Apple in a few days. And as soon as you get that percentage increase, you need to take profits, because there's this thing that I talk about in my course called time decay. The longer you hold an option, the more risky it becomes. You're basically just looking for Apple to make up what it lost today. All we need is that 3% gain on Apple, and it's down around 4%, 5% on the week. And as you can see, it looks like Apple is starting to round the corner. It looks like it's going to be coming up here, but you never know, because if you zoom out a little bit more and look at the 3-month chart. Next one we have up is NEO, and you can already start to see it heading up a little bit here. It's making its way up. So you would press trade options, and we would go to something like a May 28th, for example, and we would be looking at probably the 36.5 call or the 37 call, and that's looking for NEO to get right around $40 a share. So all we would need is for NEO to hit $40 a share in the next few weeks, which I think is very realistic. And you definitely want to consider this option stronger if NEO gets as low as $35 a share. Because remember, that's where NEO support is $35 a share. So you might want to strongly consider this call option only and only if NEO does hit $35 a share and hits that support line. Now, if we pull up PLTR, you start to see it recovering as well, up 3% from daily lows, which is a great thing. You press trade option, you'd be looking at a call again, and these calls are rather inexpensive too. May 28th, you can even go to June 4th, but you might want to do a May 28th if you have a little bit less of a budget. And I would probably be looking at this 20.5 call. It's $219. It's down 12% on the day. And we can see that PLTR is right at the support that it's been following for the last month about. So PLTR probably won't have a huge recovery in the next couple weeks, but for it to go up a couple percentage points, I think is a high possibility. So a call option could be pretty good for PLTR. So this one, we would need a break-even price. We would only need it to go to like $23 a share. And it definitely can go to $23 a share again, in my opinion, in the next few weeks. Now, BNGO is next up, and if you wait for it to go to the support of around $5.20 or even below the support, I think it could come back again, and you can consider a call option. I like the $4 option for June 16th. All you need is to go to $6 again. BNGO to $6 is very possible. It needs a 4% gain in the next month and a half, which is very achievable for BNGO, and I think is a very great option. This one I think I do like a little bit more than the others. After that, we have GNOG, and it's going lower towards the support. So I would say if it gets as low as $12 a share, or even the lowest support is $11, between $11 and $12, then you can consider a call option at that point. And you would be looking at about June 18th, right? So it gives you a nice month and a half, just like the BNGO one does. And you would be looking at this 12.5 call. Right now it's $230, but in the future, if GNOG goes down to $11 a share or $12 a share, I'm sure this option, this 12.5 call, will be closer to about $150 instead and has more growth potential at that point. Next up, we have Lemonade that's been following some support here. So if it gets as low as $80 or goes past that support again to like $75, then you can consider a call option at that point. So I'm preparing you guys for the future and laying a bunch of different options out. So when these hit the price targets, if Lemonade goes to 75 to 80, that's a good point to take out an option at. So you always want to make sure you're prepared and that you have ammo in the holster and you're not firing all your shots at once. You have stuff lined up in the future too. So if ChargePoint hits $20 a share again, I'll strongly be considering a call option at that point. So if it's $20 a share, we scroll out to the June 4th, and it's pretty affordable. It's not the most inexpensive thing in the world, but we would be probably looking at this $21 call. It's $325, so it is a little bit more expensive. All we need is a 5% gain. And if you wanted to go to June 18th or June 11th, let's just say, to meet in the middle, you would actually see the $21 call is $348. So this call can get as low as $250 or $300 for the contract. So I would probably only buy that $21 call if it was in that price range. And the last one that we have to talk about is Twitter. I posted this on my close friends list. You'll actually see the star on the top right. Looks like Twitter might have broke the support. Its resistance is closer to $65 per share, though. Where I'm looking to sell at. Maybe consider a call option for Twitter, right? And I also posted this one about BNGO stating that $4 call on my close friends list. So if you want up to the date, up to the minute, and notifications on, you can see exactly what I'm buying, trading, selling. I also put out emails like this once a week to give you guys updates. And I have a bunch of different price points. I write these emails for you guys once a week so you can go into the week with having a goal and to look at least a few different stocks to keep in mind. So back to Twitter. All of these, by the way, are going to be great for swing trades or some of them even long-term holds. Twitter is a good one for a long-term hold. And if you press trade and trade option, if you want to trade the option, you go to June 18th. Or actually, let's go to June 4th because we are a little bit more short-term on Twitter. And we would be looking at probably this 52.5 call here. And it's $380. So this one is a little bit more expensive. If you're a little bit more price sensitive, you can swing trade it. You can swing trade it and you can buy like 5 or 10 shares of Twitter, because if you do hold it for a few months, it definitely will be going back to that $65 range. So guys, I hope you enjoyed that video, and you can see the stock market is continuing to recover. If you did find value in it, smack a thumbs up on the like button if you haven't already. Make sure you're subscribed and share it with a friend this video. Also, if you need some help in the stock market, remember, I have a one-on-one training course. I'm developing my options training program now. That'll hopefully be ready in about 30 to 60 days. But right now I have the stock market training course. It's a video program. It's about 25 to 30 videos long. It's amazing. It's exactly what I look for and what I'm looking for. So here's some of the curriculum so you can actually see what you'd be learning about. There's over 20 to 30 different chapters also, and if you want to see what people are saying about it, click success number 2. There's over 100 testimonials. The original one is student success. That's why we had to make a success number 2, is because we filled this one up. But we even filled up success number 2 now, and we have success number 3. So make sure you check all of those out, and you can become a more advanced trader in the stock market. DM me here on Instagram because I am shutting signups this week. So if you want to get enrolled, let me know before I shut them. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.